So yesterday we learned about the anomaly and validation and little bit about the accumulation and distribution. Okay. We know that in the VSA works in the stages. The components of the VSA, we understand about the price and volume, then stages, accumulation, markup, distribution, and markdown. Little bit we understand. We will talk today on the accumulation, markup, distribution, and markdown. And there is two applications. When this VSA education, the VSA strategies, VSA concepts, when we apply in the chart, the main application of this concept start from the two signals. The signal, the sign of weakness, and the sign of strength. Before, when we know about the sow and source concept, how these concepts creating in the market, we know much about these concepts. Okay. So yesterday we talked on the accumulation, distribution, markup, and markdown. Today, again, we go in the deep. Okay, what is accumulation? Why accumulation is creating in the market? The formula of the accumulation is what? Okay. Just I'm giving you some examples. Then we go on the chart and highlight the accumulation and distribution areas. First, to understand what is the accumulation. Accumulation, when demand is greater, okay? Demand is greater than supply. No, it's a concept of source. Here, equilibrium. When demand and supply are equilibrium, okay, it means they are equal to each other. When supply and demand equal to each other, the accumulation form in the chart. So this type of range gives us an idea that supply and demand are equal. When we know in this accumulation phase, after some candles, if there is a 5 to 10 candles, these candles shows us a testing, that sellers and buyers testing to each other, then we can verify that it's a accumulation or redistribution. So there are more two concepts in this case. Accumulation. After accumulation, we can found reaccumulation. And if we start the trend from the distribution, after distribution, maybe again we found the redistribution. I'm going to show you one picture here. Look at the picture. The markdown trend going down, and then we found the accumulation. The accumulation appear when the supply and demand is equal to each other. After appearing this accumulation, buyers and sellers test each other. If the buyer's power is greater than the sellers, then they will break this accumulation phase. When they break the accumulation phase, the markup uptrend will start. After an uptrend in the price action, we know sometimes we find the pullback area. So pullback is a place where reaccumulation can happen. Okay, in the pullback, in the price action, we found a pullback. In this area, we found again supply and demand is equal to each other. Again, there is a testing of the buyers and sellers. If the buyers break, go up, again markup phase start. So we can call that is a reaccumulation. Okay, if from here we found the breakout in down breakout, so this phrase will change. Here distribution will come. But if the breakout we found in the same trend, in the markups in the same trend, then we can consider that is a reaccumulation. That is a pullback of the trend. Again, trend going in up direction. When going up direction, we consider that is again markup start. And then here again, supply and demand is equal. When demand and supply is equal, in this phase, still we are not decided that that is a reaccumulation or distribution. If when we found the breakout, after breakout, we can consider that is a distribution. In this case, look at the same scenario happen, but after breakout in the up direction, then we consider that is a reaccumulation. That was not a distribution. Yes, the supply and demand was equal here. As this case, supply and demand was equal, but when we found a breakout, after breakout, we consider that is a reaccumulation. Again, now again we found the supply and demand is equal to each other. You will see in the volume bar that all the volume bars are under the average, moving average. When under the moving average, it shows that the supply and demand is equal to each other. Here we found a breakout in the chart, market goes down. When goes down, the markdown phase, the downtrend starts. Okay, we are studying here VSA, that's why we use all the VSA words. Okay, in the price action, same, the downtrend, but markdown we are using. After this phase, when the supply and demand is equal to each other, we cannot decide that is a distribution or that is an accumulation. When we found the breakout of this level, then we can say the breakout is in a downward, so that is a redistribution. Okay, so redistribution, after redistribution, it means trend will continue more down. After continuing, again markdown starts. Then we found again accumulation. So this may be before forming this supply and demand is equal to each other, we will wait for the breakout. After breakout, now we confirm that that is the accumulation area. So sometimes the redistribution we can found 2 times, 3 times, 4 times. It's depend on the trend. And accumulation we can found the 1 time, 2 times, 3 times, 4 times. As a pullback, sometimes we find the pullback in the trend 1 time, sometimes pullback in the trend 2 times, 3 times, because it's depend upon the trend, how much trend is stronger. But if the trend is not stronger, only 1 time we see the accumulation, 1 time we'll see the distribution. Market is moving in the range. In the range, only accumulation distribution is working. But the trend, market is trendy, then we will find after accumulation, again reaccumulation, then we found the distribution. If the trend is going down, redistribution. So these are the phases, okay? So before breakout, here we understand that before breakout, we cannot consider that is accumulation or reaccumulation or distribution. After breakout, we can consider that now that is a trend is going in up direction. That was a reaccumulation. So how in this, inside this range, the candles create a volume. If the volume is favor in the buyers, if the buyer spikes is a peak in the volume. If that these are the volume, so the peak shows that the buyer's volume is greater than the seller's volume. So we can consider the breakout we will found from the buyers. If the seller's peak are greater than the buyer's peak, then we can imagine, we can think that maybe the sellers will break down from this level. Okay, understand this picture, the trend structure. About the trend structure, do you understand?
Yes, sir.
Okay.
Yes, sir.
So why the
accumulation?
Yes, brother.
Sir, accumulation and reaccumulation will be formed in the uptrend.
Yes, reaccumulation when the market in markup phase and we found the supply and demand is equal to each other. Again, breakout we found in the favor of the markup. So that time we can say that is a reaccumulation.
Okay, sir.
Okay. Yes, another. Okay. Okay, there are now two applications. The application of sow and sauce appear in this chart. Sow, sign of weakness. Sauce, sign of strength. Okay. Keep in mind these two things. Because of these two things, the market changes the directions. It means we must understand the sign of weakness and the sign of strength. Okay. If we understand the sign of weakness and sign of strength, we can predict the trend direction. In the few minutes, the trend direction can be changed. In the few minutes, the trend direction can be changed in the uptrend or downtrend. So this concept is very important in the VSA. This is very important. Read 2 to 3 times to remember this concept, the sow and the sauce. Okay, so sow is a sign of weakness and sauce is a sign of strength. So here we are taking the strength and weakness in the trend. When the markdown, we found the markdown. In this, when the seller's candle weaken, this type of, we found the seller's candle. The sellers are weakened here. When the sellers are weakened, then we will found the accumulation. This type of testing phase we found. After accumulation, market goes up. So that is a sign of sauce. It means sellers are getting weak and buyers are getting strong. In the trend, in the markdown, if the sellers getting weak, that is a sign of strength. That is a sign of strength for buyers. When the buyers are getting weak, that is a sign of weakness of buyers. The sign of weakness of the buyers, after sign of weakness, the supply, the distribution will start. And then we will find the markdown phase. Okay, so here start the source strength of the buyers. Here buyers strength is getting weak and sellers will start from here. So these two applications are very important. All the concepts are appearing in the two applications, in these two applications. Okay, again and again we will talk on the sow and the sauce. So sauce is a application in which the sellers are getting weak and buyers are getting strong. Sow is the application in which buyers are getting weak and sellers are getting strong. So there are some candles which shows the strength and weakness of the trend. Those candles are this type of hammer, pin bar, inverted hammer, inverted pin bar, this type of long ledge doji, this type of long ledge doji in the uptrend. These are the signs. After these signs, market will change the direction. Okay, so in today we will learn about the buying climax start and buying climax end, and selling climax start and selling climax end. These four things today we will learn in the sauce and the sow concept. It's very important to understand when the buyers start, which is the sign that this trend will continue more, and when the buyers are exhausted, we will find the sign, some sign in the candles, then we can consider now the trend will going to change. Our trend will create a range. After creating the range, the trend will go in the markdown phase. Okay. So here understand about the source and sow. Simple, that the sow is a sign of weakness and source is a sign of strength. Okay. Is it clear here?
Yes.
Okay.
Yes, sir.
Okay.
Yes, sir. Yes, sir.
Okay. 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 Now moving to the next. When we found the breakout, so here we know that we are coming from the downtrend. In this testing phase, we found a breakout of this level. In this level, a candlestick appear, it break the level. When candlestick break the level, the volume must be increased from the previous levels, previous bars. That is a sign of buying climax start. In a breakout or after a breakout, sometime you will find on the breakout candle a big candle which increases the volume. That is a sign that now this breakout is a true breakout and market will start from here. After this candle, you will see this retracement. In the price action, we are calling that is a retracement after breakout. But in the VSA language, that is not a retracement in the VSA language, that is spring. Spring and retracement are the same. But we are learning the VSA, so that's why I'm giving you all the concept, all the words of the VSA. You must understand retracement. When I call or when I talk about the spring, you can understand that is a retracement of the trend. Okay. After breakout, we will find the retracement on the key level. Then we can place a trade for the 5 minute. The market will go in the up direction. Okay, that is a breakout. So this first candle, we will search on the chart that is it working or not working. The buying climax start. Today, buying climax start on the chart. How we can recognize that is the buying climax start? Now the trend will change the direction. Look at this candle, these candles. Just I want to clear the example, clear the most easiest example, then you can understand. Yes, here. Sometimes you will find the range after downtrend, the range, and sometimes you will find the immediate result. Okay, so in this case here there is a range. Okay, this range, this morning star pattern, because we are trading this all the setups with the morning star or with the price action patterns. In this morning star, this range is broken by this candle and volume is increased. So that is a sign that that is a buying climax start from here. Okay, so on the sometime you will find there is a morning star. After morning star, another candle you found, the volume increasing on this candle so much. On these candles volume not increasing, but on this candle volume is increasing. That is a buying climax start. In this case, that is a buying climax start. Sometimes start from the pattern, sometimes start from the next candle of the pattern. So here start from here because the volume increased from here. So that is the buying climax start. Okay. When the buying climax start, the trend will go in the up direction. How we can understand the trend is now going to change the direction? It will go reverse. How? If the buying climax start give us a signal that market will start from here for 5 to 10 minutes, if in with these candles, in these group of candles, once again you found a ultra high volume in the candle, that is a sign that in near future market will change the direction. How? Look at. On the first candle, we found a volume is increased from 1, 2, 3, 4. Now once again we found the volume is increased so much. So that is a sign that now trend is going to change in near future. So after 1 to 3 candles on the support, when there is support or resistance you found, from the support and resistance the trend will change. Here it shows that buyers are exhausted in this candle. It means when the trend starts, it starts with the high volume and it ends with the high volume. The two things we found, trend always start from the high volume and end with the high volume. When you find the high volume, ultra high volume from all the candles, that is a sign that market is now exhausted. In the few candles, we will find the reversal. So after a few candles, you will find the reversal. So now we are finding the so many examples here. To understand, trend start from here, it goes up. The trend is, we found a high volume in this trend as compared to these 5 to 6 candles. The volume is increased from all 5 to 6 candles. That is a sign that trend is now getting exhausted. In a few minutes, when the candlestick closes to the resistance level, the trend will going to change. How? In this case, where is the resistance? So we must understand the resistance and support. So the one resistance is this breakout, and the one resistance level is this. There is no any resistance level. That's why the buyers will continue. The dummy candles you will see, they candlestick reach on the resistance level, then the trend will change the direction. So these are the signs. A start of the trend. In this case, we found another sign. The trend is exhausted. Now when the candlestick reaches on the support and resistance level, from these levels the trend will change the direction. So that is what? That is a buying climax end. Buying climax end. So buying climax end you will find with the one sign. I'm going to give you the one sign. Okay, that is the climax. That is another thing. Okay, that is another thing, but that is a true climax. In the climax end, you will find the rejection on the upper candle, upper level from that rejection. You will find the green candle, and 25% to 35% you will find the rejection from the upper side. That is a sign. You know that when we found a rejection on any candle, that is a sign that sellers entered in this candle in the uptrend. When sellers entered, the volume must increase. That is a sign that now sellers entered. But when the sellers not entered, the volume must not be increased. The volume must be below. Okay, so in the candle, in this candle, as we compare to the previous candle and this candle, that candle volume is a high volume as compared to the previous candle, but the previous candle is larger as compared to the last candle. This candle is a larger, this is a smaller candle, but volume of this candle is increased. When increased, we can consider, oh, there are the wicks from the bottom, from the upper level. When you found the wick in the candle and volume is increasing, it means the sellers entered in this candle. You will find the next reversal. In this case, there was no any resistance level here near. So the sign already warned us that we are entered. On the next level, we will enter to change the direction of the trend. That is the buying climax end. I'm giving you some examples more that you can clear about the buying climax start and buying climax end. So look at this candle. Is the volume is increasing from previous so many candles. That is the buying climax start. Okay. And in these candles, we did not find any buying climax, buying start, or buying ultra high volume in these candles. Then how we can understand? There is another concept. The concept is that bullish effort is less than bullish result. So in this candle, the bullish result is high, but the bullish volume is not high. That is a sign that trend will change the direction in near future. So in this trend, we did not find any buying climax end, but we found that bullish effort is less than the bullish result. That is a sign of reversal. So that is a signal. In near future, market will change the direction. But immediately, that signal not work immediately. It will work in near future. When the candlestick is close on the resistance level, that is a round number, you will find the trend is going to change here. This concept now you understand. This concept, bullish effort is less than the bullish result. That is a concept of markup. In the markup, you find the bullish effort is less than the bullish result. That is a sign that trend will change the direction in near future. Now in this case, the buying climax start here, the volume increase from the previous candle. In this candle, we found a rejection on upper level, the 25%, and between the 35%, there is a rejection in the candle and volume increased. That is a perfect signal. That is the immediate signal. Because candle is a larger from previous all candles. That is the immediate result. You look at this candle, if you find this type of candle, that is a signal immediate reversal. That is the buying climax end. Buying climax end. That is a buying climax start. Buying climax end. So what is the climax? The climax is a high volume. The climax is a high volume from previous all candles. So in this case, we found a high volume with this candle. And the candle have a 25 to 35% rejection. That is the climax candle. If the climax candle have not rejection, it means it is another signal. But the climax end have a rejection of 25 to 35%. Now you understand? Is it clear? Buying climax end. So buying climax candle must be like that. Climax means ultra high volume. You will find the ultra high volume from previous candles. That is a candle which is rejection from the upper side. Is it clear?
Yes, question.
Yes. Okay. Yes, yes. Ask me, brother.
Okay, so in buying climax end, where we find the long or the high volume and widespread candle with rejection, should we wait for it to reach a resistance level before we place put option, or we should just place put option immediately?
Yes. If this candlestick right close below the resistance level, then you have to place a put option. If the resistance level is little bit above, you wait for the candle. The next candle will cover the resistance level, and then you have to place a put option.
Okay.
Okay. So in this case, I'm giving you example like that. Look at. So this candlestick right close on the resistance level. Do you imagine? Look at. That is a resistance. Market create a range here. That is the resistance. And the resistance starts from here. So that is also suggesting that the candlestick close on the resistance level. That's why we can place a trade here. Okay. In this candle, there is no past price action. Only the resistance is here. That's why we can place a trade from here. 1, 2, 3, 4, 5, it's going down. Or you can most confirm the trade when you confirm, you will find any bullish bearish pattern. Here we found a bearish pattern, bearish pattern, bearish pattern. Then you can start from the bearish pattern. That is another confirmation. If you find this signal, and after this signal, when market change the direction, it must give you the reversal pattern. Which reversal pattern? Bearish reversal pattern. On this level, when market is going to change the direction, it will give you reversal pattern. After reversal pattern, you can place a trade. It will go down. You don't place an immediate trade. After signal, you wait for the reversal pattern. If any reversal pattern, price action, any reversal pattern you find, you can place a 5-minute trade. Then it will work for you. Understand now?
Okay.
Okay. Any other?
Yes, sir. Here I have one question, sir. Sayed here.
Yes.
Sir, as yesterday I've explained about the this validation and the anomaly. Here we can see that the candle is going with the validation. Like earlier volume is less than to next no, means
Yes.
this present candle.
Yes.
So
Yes. Yes.
we need to go with the next with the call option,
Okay.
or we need to wait for the as you have explained now
Okay, brother. Look it. We are
validation and anomaly.
now the validation and anomaly. We just uh, understand when the candlestick are alone. Okay, but here we are in the context. We are in the trend. Okay, the trend have a power. But if we are talking on the anomaly and the validation, this candlestick not validates, because previous candlestick have a small spread. This candlestick have a larger spread, but volume is increasing. And also there is an anomaly between these two candles. If these two candles spread, you can check, you will find the anomaly. So now how we can use the anomalies? Anomalies we will use for the trend is weakening, our trend is increasing, our trend is getting power. Okay, in this case, now when we are trading in the trend, now this anomalies give us a signal that this trend is not going perfect. In near future you will find the signal, then you can place a trade, it will goes down. Okay, now anomalies and validation we will use for the trend continuation and trend reversal, but now I am giving you the signals. Okay, these are the signals, these are the perfect signals which give you idea that market will change the direction. Anomalies and validation are not the signals. Anomaly and validation are the tools in which we can understand this trend can go longer or this trend cannot go longer, or there is something wrong with this trend or the trend is going correctly. Okay, now this validation and anomaly only we use for the trend continuation or trend reversal, but we only put or place a call option on the signals. Okay.
Okay, sir. Yeah, got it.
Okay. Any other? Okay. In this, when I'm teaching you these signals, maybe sometime these signals will confuse you, but when you understand more signals about the when I give you the more study about the other signals, then these signals will be clear more. Now just to remember these signals, the buying climax end. The buying climax end is a sign a candle have a rejection from the upper body 25 to 35%. And volume increase ultra high volume. That is the buying climax end signal. And when you find the trend is going to weaken and you find any green candle, the volume increase so much, that is the buying climax start of the trend. From here you can start the trend. That is the first signal. That is the second signal for the put option. So always after green candles, after red candles, when you find the green candle and volume increased so much, that is a signal you can buy. And when you find this type of buying climax end, you can close your option. It means now that market will fall within few candles. Okay, so buying climax start and buying climax end we understand. Now we go forward to the selling climax start and selling climax end. Okay, there are 2 minutes remaining in this session. I will give you another link to join me. Okay, 2 minutes we're talking on the buying climax start and end. Then we will start on the next session with the buying climax end and start selling climax. Okay, here look at this candle. In this candle the volume increased. That is a sign that market will continue more. Okay, market continue more. So in these all candles now we don't find any selling buying climax end. If buying climax end we don't find, don't be confused. There are so many other signals which will give us a sign that now this trend is getting weakening. The trend is in the few minutes, or the trend will change the direction. If sometime you find the buying climax start, it's possible the next in this trend you will never find the buying climax end. Sometime you will find the buying climax end, sometime you will never find. There are another signals which I quote: the bullish effort is less than the bullish result, or bullish effort is greater than the bullish result. These type of signal are buying climax, buying effort is failed. This type of signal, no supply, no demand bar signal you will find. Or up thrust there is a signal, or down up thrust there is a signal. These are the signals will come instead of the buying climax end. Sometime you will find the buying climax end, sometime you will find the another signal. Okay, so I'm giving you another link now. Again we continue this session.